Welcome back. You're watching Market Fatafat right here on ET Now, a show where we get you all the stocks buzzing based on news flow as well as on technicals. And talking about technicals, now we have Osho Krishan joining us on the show. Very good afternoon to you, Osho. Thank you so much for joining us on ET Now. And firstly, let's talk about the first stock that you want to talk about, and that is BEL. We're seeing a sharp run-up in all of these defense counters in today's trading session on back of news flow. But on the charts, where is BEL headed from here on? Further scope of an upside?
Everyone. Well, yes, all the defense counter is looking very promising as of now. Specifically, if I'll be saying about BEL, then on technical parameters, it has been on the bullish trend from the levels of 95 odd zone, and currently it is hovering near 127. From here onwards also, we are expecting an immediate upside target of nearly 10 to 12 points from here on. So looking at the overall trend and the volume that can be seen in today's session, we are expecting the bullish run to continue. Also, it has been a consolidation breakout around the levels of 126. For the immediate basis, the target comes around 134. But from short-term perspective, one can expect the rally to continue towards 145 levels from short-term perspective.
Okay, surely keeping an eye out on those levels for BEL. But let's move on, talk about MINDA Corporation. Why is this one in focus? And it's actually surging in trade. Managed to hit a 52-week high as well. As one point of time, it was up as much as 5%. As of now, also holding on to these gains. And this is mainly because of an order that they've secured for around 750 crores. And this is for a contract of from the leading OEMs. Now, this is under the contract. MINDA Corporation has said that they will be producing battery chargers for electric vehicles, and the product will be manufactured at the facility which is run by Spark MINDA Green Mobility Systems Private Limited, which is a wholly owned subsidiary of the company, and this is based in Pune. So obviously on the back of this 750 crore order win coming in for an EV business of this, that's the main reason we're seeing focus coming in on this one.
All right, let's talk about the newest kid on the block, and that is Cyient DLM. We saw a record, like a bumper opening, not a record opening, but a bumper opening in yesterday's trading session for this particular counter. And today as well, it is actually seeing an uptick, second day of gains coming in for Cyient DLM, and it is soaring almost 20% as we can speak. Remember, as we speak, I beg your pardon. And remember that when the IPO had been launched, it was oversubscribed by about 90.44 times among qualified institutional buyers and nearly 50 times among the retail investors. Not just that, in yesterday's also bulk deal, we saw a prominent name, also a fund name that actually bought into Cyient DLM. So all of these factors are actually aiding the run-up. Second day of gain, second day being a listed company, and the stock is seeing an uptick of approximately
surely
20%. Not
disappointing the investors who have actually gotten the subscriptions for Cyient DLM. And obviously that EMS space itself is buzzing, right? So an EMS IT kind of a combination coming in from Cyient DLM for this sector is surely at a good value. Cyient DLM keeping on and giving a thumbs up are the investors for that as well. But let's move on, talk about the next one, and that is Varun Beverages. Vamakshi, I beg your pardon. Why is Varun Beverages in focus?
And focus on the back of a brokerage note from Motilal Oswal. They've reiterated a buy rating on this counter given a target price of 940 per share, and here are the factors that they've enlisted for that rating. Now, they have highlighted that Varun Beverages, as we all know, is one of the most prominent players in the carbonated soft drink segment, and in fact, the company is now targeting to expand in other categories in order to maintain its robust growth trajectory. Now, as per a recent report, Indian flavored milk market is set to register a CAGR of almost 25% by calendar year 28, and Varun Beverages, especially after receiving a positive feedback for most of its products in this specific category, is increasing its capacity in the segment. It is also looking to triple its capacity in calendar year 2023 and follow it with a national rollout of its products in calendar year 24. The company has also recognized the potential in the sports drink segment and in fact has entered this market with its product Gatorade. They're also looking to expand their international presence, and the volume growth is expected to be muted in the second quarter. That's the first quarter that is yet to come. But they are definitely increasing the shares, which could actually drive the overall revenue. So given that positive outlook from Motilal Oswal, they maintain a buy rating, and as you can see, the stock is surging in trade today, nearly 1% higher.
All right, that's Varun Beverages for you. Motilal Oswal giving a thumbs up for this particular counter. So let's talk about a formidable player in the pharma space, and that is Cipla. On the charts, how does this one look to you?
Current financial year, it has been on the uptrend in past 3 months. So we are expecting that this should continue, because looking at the technical view, the bearish gap which was placed around the 1000 to 1020 zone, that has been filled up from the bullish momentum, and currently the stock is hovering near the 200-day SMA. So that's also a very strong development that can be seen in this counter. So from here onwards, we are expecting that after the recent consolidation around the 200-day SMA, we are expecting that the uptrend should continue. For the immediate basis, 1070 to 1080 will be the immediate target, and once it sustains above 1080, then from there onwards we can see a very strong reversal in this counter.
Okay, keeping an eye out on Cipla, keep an eye out on those levels over there as well. Let's move on and talk about L&T, and why is this one in focus? Actually, we had an announcement that came in that they have recently entered into a significant master ship repair agreement, and this is with the US Navy. Now, L&T's Kattupalli shipyard is near Chennai and as a qualified facility for conducting voyage repairs for military sea lift command, and obviously the vessels over there is specifically for that as well. Now, the press release also said that there's a thorough evaluation that is actually done by the US Navy and the military sea lift command as well, and the shipyard's capabilities have been recognized and enabling it to actually undertake this contract as well. And on the back of this, we're seeing that today L&T is in focus as well, and still look at the gains that we're seeing coming in, 1.4% uptick as of now.
Absolutely, that's the reason why L&T is in focus in today's trading session. Let's talk about SJS Enterprises, and this particular counter is in focus, because JM Financial has come out with a note where they've initiated a coverage on this particular stock with a recommendation of a buy. They set the target price around 850 rupees per share, which is approximately 45% increase from yesterday's closing price. No doubt the stock was actually seeing a good uptick. You can see it on the screen. There was a sharp spike at open. It was holding on to its gains for the most part of the day, but now it's given up some of its gains and is trading higher by about 0.5%.
Okay, that is SJS Enterprises for y'all. But let's move on, and one more name coming in from the healthcare side for you, and Osho Aster DM on the charts in the last 6 months, almost 40% returns is what we are seeing. Now, what is the target that one should keep an eye out on? Is it time to book profits or a further run up is what you're expecting?
The trend for Aster DM is very positive. We are witnessing a kind of cycle of higher highs, higher lows pattern on the broader term perspective. And also looking at the recent development in the last week, it has surged from the levels of 290 towards 330 zone. So that also on the back of a strong volume. So overall, the structure is very positive. As of now, the counter is facing some kind of cool off or profit booking from the higher levels, but overall the bullish sentiments remain intact in this counter, and we expect that this construction should be seen as a positive development in this counter, and a close above 320 will be the first signal for the uptrend to continue. So one should definitely try to buy this counter only above the closer of 320 zone for the immediate upside target of 360 from short-term perspective.
Alright, moving on. Vamakshi, let's talk about Avalon Tech, and why is this particular counter in focus in today's trading session?
Well, Cheryl, when we look at this counter, the lock-in for the anchor investors has opened today. The lock-in was on around 7.7% stake of the anchor investors, and those shares have now come in after lock-in. So the supply in the market has definitely increased, and in fact, in the morning we had highlighted that we could see some selling come in from anchor investors. Some of the key investors that had invested in the company include Unify Financial as well as India Econ Fund. Now keep in mind that the stock is up nearly 42% from its listing. The listing, however, was muted. It came in at almost 1% discount, and in fact when you look at what the company does, it is a direct play on electronic manufacturing services. They recently also met Goldman Sachs, and in fact some of the triggers as far as this counter is concerned is that they aspire to double revenues in the next 3 years. 2 new facilities are expected to come up in the next 6 months, and in fact they are also aspiring to have EBITDA margins over 13%. So on the back of the anchor lock-in opening up on nearly 7.7% of the shares, we have Avalon Technologies in focus. The stock is dealing under pressure, down nearly 1%.
Okay, surely keeping an eye out on that one. But on the charts, Osho, you're going to talk to us about Indian hotels. This one surely has gained a lot of momentum, has seen a good uptake in the last 6 months. Also, we're seeing 30% return. Do you think it's time that we could see a bit of a halt coming in the run-up for Indian hotels now?
Well, the trend is still bullish from from here onwards also there has been some kind of profit booking that can be seen in this counter at current levels, but looking at the overall technical setup, there has been a decent price wise correction in the recent period. So from here onwards, one can expect the counter to retest the recent high around the 410 in a very short term perspective. But if there will be a continuation, then from here onwards, one can expect 20 further points from the levels of 400, 410. So 430 to 440 should be the immediate target for short term traders. But looking at the overall technical setup, one should not be very aggressive at current levels. One should definitely try to gauge the momentum only above 400 levels for the immediate target of 430.
Okay, another buzzer in trade today is APL Apollo, and Lisa is here to tell us exactly why is it buzzing in today's trading session. Lisa.
Well, APL Apollo tubes, they have received incentives from the Chhattisgarh government. The State Investment Promotion Board, they have granted 500 crore incentives to APL Apollo's subsidiary, that is APL Apollo Building Products. And the SOPs, they involve many incentives such as relaxation of the stamp duty and also 75% net SGST for 15 years, electricity duty exemption for a period of 15 years, and also transport subsidy towards exports. So we can see the stock was up and it also touched a high of around 1,362 in early morning trade. But since then it has cooled off the gains. And talking about the incentives, it's granted for their setting up the manufacturing facility, and this is at Baloda Bazaar. And this facility contributes 3% of their overall financial year's total revenue. So that's on APL Apollo Tubes.
Okay, keeping an eye out on APL Apollo Tube, but that was the news flow there. On the charts, Osho, what is the view coming in for APL Apollo Tubes? Last 6 months moved on from around those 1,094 and currently around that 1,300 level. Where should we be seeing it going from here on?
Overall, the technical structure is very positive. Looking at the development in the last 2 months specifically, then the counter has gained from the levels of 1120 towards 1400 odd zone and currently consolidating around the base of 1300 levels. So as we can witness that it is forming a strong base before the next setup of rally. But looking at the technical setup, we can expect the flat pattern breakout in the near period, and for that the target should be approximately around 1600 in the short to medium term perspective. So overall, the technical structure is looking very aggressive, and one should definitely try to gauge the momentum in this counter for the upside target of nearly 1600 from short to medium term perspective.
Okay, that is APL Apollo Tubes for y'all. But let's move on and talk about Saturn Credit Network. Why is this one in focus? It's actually hit a 52-week high today, and the board has actually approved a fundraising. This fundraising proposal is for issuance of NCDs of around 5,000 crores, and the fund will be raised via private placement basis. So on the back of this, we've seen the buzz coming in for Saturn Credit, and also when we spoke to the management today, they are quite positive on this microfinance industry. They expect a good growth coming in for the industry as a whole. They've given a 25% guidance in terms of growth for the going forward year as well, and that is what they sounded quite bullish in terms of the growth there, and that is the main reason that Saturn Credit is also in focus, keeping an eye on this one, trading with gains of almost 3% as of now.
Alright, moving on, let's talk about Go Fashion, and Elara Securities has come out with a note on this particular counter where they've initiated a coverage on Go Fashion India, and this with a recommendation of a buy. They set a target price of around 1,458 rupees per share. If you actually look at it, it's approximately 31% rise from yesterday's closing price. So on back of that, you can see Go Fashion that is seeing a good up move. And not just Go Fashion, even Vedant Fashion, they've actually initiated coverage on that particular counter, but Go Fashion is the one that is actually bucking the trend.
Keeping an eye on that one. Let's move on and talk about Escorts at stock number 32. And Osho, in terms of the technicals, what is the level that you are keeping an eye out on for Escorts now?
Yes, Escorts is forming a rounding bottom pattern on the daily chart. So looking at the technical setup, from the past 2 to 3 months, the stock has been gaining traction and has been in the cycle of higher highs, higher lows. So currently we can expect the immediate upside to be tested near 2350, which is the recent swing high or 52-week high. So once that level is getting breached, then from there onwards we can see a very decisive up movement in this counter. Overall, the technical structure is looking very buoyant, and one can expect a very good returns in the coming short to medium term perspective. So overall, one can expect a gradual up move. There won't be a significant or vertical rally that can be seen in this counter. But looking at the overall technical setup, any breakthrough above 2350 can add up to 200 more points in this counter.
All right, so that's the word coming in on Escorts Kubota, but let's put the spotlight on IT companies. And yes, come tomorrow, you will have TCS, HCL Tech actually kickstart the earnings season with a bang, quite literally. But IT index or either mid-cap IT stocks is what is on JP Morgan's radar, isn't it, Vamakshi?
Yes, Cheryl, when we look at these counters, they're in focus on the back of a brokerage note that has come in from JP Morgan, and they have highlighted that the ER&D segment, the spends are expected to see a slowdown over the last 6 months. And when we look at the last 6 months, the spreads have actually slowed down, but this slowdown is structural and not cyclical is what they have highlighted. Channel checks are in fact suggesting that there is no urgency amongst enterprises to spend on these areas, and JP Morgan also believes that this puts the high teen revenue growth assumptions over the next decade, which is actually priced into the current valuations at risk. They continue to see de-rating potential from here on for these counters, and which is why they've reiterated their underweight stance on these counters, that is L&T Tech, Tata Elixir, Persistent Systems as well as KPIT Tech. For L&T, they've given a target price of 2,900 per share. You can see the stock decline almost 1% in trade today. Other than that, they've also given a target price for KPIT at around 540 per share. That the stock is also reeling under pressure, but it is trading flat with a negative bias. And we also have a target price of 4,600 as far as Tata Elixir is concerned, and the stock is again reeling under pressure, as you can see, down nearly 0.4%.
Okay, that's the mid-cap IT space that we are keeping an eye out on. But let's move on and talk about Sun TV on the charts. And Osho, when you look at it, Sun TV has not done anything much in terms of returns in the last 6 months or last 1 year as well. Now, what are the charts indicating for Sun TV?
See, overall, the stock has been in a downtrend from the highs of nearly 550 odd levels, and from there onwards we can see a very strong lower lows, lower bottom pattern on the daily chart. But from past 3 months, the counter has gained some kind of traction from there onwards, and we can witness that the lower has been increased to the higher levels. That means from past 3 months it has been trading in a higher highs, higher lows formation. So that means overall the sentiment has turned bullish in this counter. There is we still need to wait for the reversal to come in this picture, but the reversal, the levels that one should watch for is nearly 480. So 480 on closing basis can give a strong rebound in this counter, and from there onwards one can expect a decent rally near to 530 odd levels from short term perspective. So definitely there has been a change in the reversal, and one should keep this counter in their radar for a good returns in short term perspective.
All right, that's the take coming in on Sun TV. But Lisa, let's talk about Tata Communication. This one is soaring in trade today. And what's the news related to this one?
It's on the back of acquisition, Cheryl. Tata Communication's wholly owned unit, that is Tata Communication International, they have acquired around 42% stake in OSS Smart SIM Europe for around 99 crore, and they had acquired 58% stake way back in 2020. So now they become a 100% stakeholder in OSS Smart SIM Europe. Tata Communication has many business services and segments, and one of them is they are into new age segments, and one of them is collaboration and connected solutions. So OSS, they will become a part of this business segment, and it bodes well for Tata Communication because OSS they reported a revenue growth of around 109 crore in FY23 versus 45.9 crore. So the company is growing because what the Chief Strategy Officer Tata Communication, he said that the global eSIM industry is growing exponentially and disrupting the industry, and they are also accelerating their efforts to empower enterprise and also gain a strong foothold in that. So it will help the company to enable the deployment of eSIM and SIM technologies. So that is why we can see Tata Communication is soaring in trade today, and it's up around 6% as we speak.
Okay, let's move on and talk about SBI Cards then. And there is a news flow around this as well that SBI Cards MD and CEO, we're seeing Rama Mohan Amara, who has resigned as the MD CEO of the company from 11th of August, and they will be appointing Mr. Abhijit Chakravarti as the new MD over there. I beg your pardon. That is just the resignation that has come in. So keeping an eye out on that resignation. But SBI Cards Osho, in terms of the returns, also has not done anything exciting. Just 7% in the last 6 months. So what is the new, chart actually indicating now for this one as well?
SBI card has corrected nearly 11 to 12% from the recent highs of 930 odd levels and currently hovering near the 200-day SMA. So from here onwards, we are not very much optimistic in this counter, but one can definitely look to accumulate something on the lower end towards 820 to 810. Because looking at the technical setup, the counter has entered the oversold region. So from here onwards, the downside is very much limited. The 200-day SMA is also placed around 810 odd levels. So one should try to accumulate this level, accumulate this counter at these levels. But there will be a gradual up move that can be expected from in the short run period. But overall, one should wait for the counter for a strong reversal kind of a pattern, and then only one can get a decent returns over a period of time. But for long-term or investment perspective, one should definitely try to gauge these fall in the recent period.
Certainly.
All right, so that's the take coming in on SBI Card. As for the stock in today's trading session, is doing absolutely nothing, but it's at the day's lowest point. But let's talk about a stock that is buzzing in trade today, and that is Greaves Cotton for you. If you look at that particular counter, so enough move as much as 4% earlier on. It was the sharpest intraday jump for the company since June 5th. The company's e-mobility unit has clocked over 2 lakh secondary sales of Ampere electric electric two-wheelers in the quarter gone by. That's in Q1, and on back of that, you can see the stock is trading at the highest level since June 23rd. They said that their e-mobility division, that is Greaves Electric Mobility, achieved 2 lakh retail sales of the electric two-wheeler Ampere as of June, and also mentioned that the company has crossed 1 lakh sales of electric two-wheelers till March-April. That is in last year, 2022-23. And this also comes on the backdrop of government reducing the subsidy on the electric two-wheelers from 40% to 15% under the faster adoption and manufacturing of electric vehicles in India, Scheme 2, that is from June 1st onwards. So all of that is aiding Greaves Cotton, good healthy electric two-wheeler sales coming in for the stock.
Okay, let's move on and shift gears and talk about a banking space name, and that is Kotak Bank, Osho. On the charts, what is the view for Kotak Bank in the last 6 months? Just 5% return. What should we be expecting now?
Has been consolidating towards the 200-day SMA on the daily chart, and also the positive thing that we can witness in the on the charts of Kotak Bank, that it has consolidated or has taken support at the bullish gap. So that means from here onwards, the downside is limited in this counter, and one can see a gradual up move towards the level of 1960 in the coming period. So again, from investment perspective or short-term perspective, one can see a gradual up move in Kotak Bank because the stock has been consolidating from past 2 to 3 weeks, and it is at a very crucial juncture where we can witness two it coincides with two strong supports. One is the 200 SMA and the other one is bullish gap. So from here onwards, one can expect a decent up move in the coming period in Kotak Bank.
All right, so that is the view coming in on Kotak Mahindra Bank. But Lisa, Zen Technologies, why is this one in the spotlight?
52-week high, and it also went up 15% intraday level. This Zen Technology is in focus as it won a significant order of around 340 crore, and this is in the export market. The company is in an order winning spree. Just a few days ago, they also received an order from the government of India for 160 crore order win. The company in the last 6 months, it has gone up 48%, and also in the last 1 year, it's gone up around 178%. So on the back of all this order win, Zen Technology is in focus today, and it's seeing a positive reaction basis this order.
Okay, that is in technologies for y'all. But let's talk about Raymond's on the charts then. And Osho, this one has surely seen a good up move in the last 1 year. When you look at it, it's up almost 84% in the last 1 year. Last 6 months also continues to see that momentum and run up as well. So what are the charts now indicating?
See, overall, the technical setup for Raymond has always been on the bullish front. The stock has been in the cycle of higher highs, higher lows. So we basically have to gauge the consolidation zone from where we can witness another leg of rally in the counter. As of now, on daily chart, it has seen a cup and handle pattern breakout from the levels of 1700 odd zone for the immediate target of 1900 to 1940. So one should definitely try to gauge the momentum in the coming period, and that too from a very short-term perspective. So 1900 to 1940 will be the immediate target that one can expect in Raymond, but the overall trend remains on the bullish side. So overall, one can even stay invested in this counter for a medium to long-term perspective.
Alright, so that's the view coming in on Raymond, and that was indeed the last talk on this edition of Market Fatafat. It was a goodbye from Winnie, myself and the team that put the show together. Stay tuned, closing trades coming up next.